to record this, which I just started the recording for people who've missed this, so we can send it out and give them an opportunity to hear what was discussed today. I will go ahead and start a little bit about myself, and then I'll try to call a few people around. You can either make some comments. If you wish not to comment, I will also try to check the chats to see if you don't have any comments at the time about the questions I asked for, your name, the city that you represent, and what's going on in your region or city. Feel free to share what you are comfortable with. Again, I'm Jeremy Hill. I'm the director for the Center for Economic Development Business Research. We've been engaged with several of these across the state in these regions about doing our Economic Outlook conferences there. We, as a center, are continuing to try to strive to, as a data center, to provide information and give resources to these regions, and we want to continue to develop those relationships and be a resource so that not only the community development agencies can continue to grow and have a better understanding of what's going on, but be an agent for the businesses there to make sound business choices over the coming year. The Center for Economic Development provides forecasts. We do impact studies. We do a lot for companies across the state. We have an accelerated business research product where businesses will come to us with a question and they want answered within a couple of weeks, and we will process that for them. I will present some stuff, but I also would like to have some dialogue this morning, and I will give you some options to kind of take the direction of this presentation to where you might want to talk about versus some of the stuff that I've planned. So I planned quite a bit of content, but hope to get some dialogue and make it useful for the people that are participating. I will go ahead and start this in order. Chris, I know you're having a little bit of hard time with your microphone. Do you want to try to talk a little bit again, and again say your name, the area you represent? And if your mic doesn't work, I'll try to speak up, and we can also get it through the chat component, and I can follow what you said and repeat it for you. Go ahead, Chris. All right, Chris, we really couldn't hear what you said. When you get a chance, if you can type something in, I will repeat it to the audience. Dan, why don't you go ahead?
My name is Dan Stetson. I'm the Regional Project Manager for Northwest Kansas for the Department of Commerce, Business and Community Development. And my partner, James Foster, is out of the Colby office. We cover 24 counties in northwest, north central Kansas as liaisons for the Department of Commerce, working primarily with economic development directors, Chamber of Commerce organizations, as well as primary industry as far as manufacturers, those primary jobs. Within the region, the biggest thing going on right now is the dropping in oil prices. Has a lot of concern. The boom, I think, for those companies that have been through it before, they're accommodating it okay. The ones that were new, we're finding more and more of them expect to leave the oil field and come back into the manufacturing sector making the same kind of dollars, and it's just not happening. We've seen some movement with companies who delayed expansion projects and so on based upon the Affordable Care Act and the election, and now some of them are moving forward, some of them are still hesitant based upon their concerns over other factors. But overall, it's been rather slow as far as this time of year compared to other years as far as inquiries for business startups and new expansion projects.
Great, thanks, Dan. Chris wrote in and said he's the Economic Development Director for Ness County, and just an hour west of Dodge City. Let me open this up. Something else came in, and I can't read the whole thing. Let's see. He's repeating some of the stuff about what Dan had said. This is Chris's comments, that the drop in oil prices are a big impact for the region, and then hope to start some wind farms in the north part of the county to help for those guys that have been being laid off. Thank you, Chris, for making those comments. And Eric, do you have, can you go ahead and introduce yourself?
Yeah, good morning. Eric Ivey, I work with International Transmission Company, or ITC for short. We are the nation's largest transmission-only utility. We're based out of Novi, Michigan, and we have regional offices in Dodge City, Wichita, and Topeka. I do community outreach and local government affairs throughout the whole state of Kansas. My office is in Dodge City right now, but as I said, I go all over Kansas doing outreach. We currently have 2 lines in Kansas that are in service and have electricity on them. One of them is our KEOT line. That's going from Spearville, Kansas up to Nebraska. We have another line that just went into service last month. It's called our V-Plan. It goes from Medicine Lodge up to Spearville. And later this year, we will be starting our 3rd project in Kansas. It's called Elm Creek to Summit, and that will span in Cloud and Ottawa County. We're going to do the northern half of the line, and West Star is doing the southern half. So I know Dan, a lot of people that have been on these calls, but I work with a lot of economic development directors and just talk to them and let them know who ITC is and, you know, the economic impact of bringing high voltage power line through their county. So that's kind of what I do.
All right, well, thank you. All right, I will go ahead and start here. I have this as an overview. Here are the few things that I can cover. So I would like your feedback. I have the very top item here. Did the U.S. economy get the message that the global economy stinks? So we can talk a little about what's going on there. And really the question is, can the U.S. economy continue its growth, continue its expansion that we've seen in the last few months with what's going on in wages and currencies globally, what's going on with some, because of our increased relative dollar, it's slowing down some of our manufacturing. We might get in a little bit of that discussion. We can lead wherever you want to. Second one is cheap oil, good or bad for Kansas. It sounds like we'll go ahead and cover that one. I added in the third bullet item, which is what could possibly happen over a decade. This is county-level data showing the shift in employment, the shift in wages, and also establishments, which is, I think, a little bit interesting. You might have some thoughts on there. And then I put a year-over-year data by county for the same 3 data elements by county. Less money in, less money out, you know, the state budget. We've got some comments there and some thoughts about the cigarette tax and how it might impact the state, impact consumers and businesses. And then we have the case for economic boredom, which is our Kansas Employment Outlook, which we updated just earlier in January. Let me hear your thoughts of which ones you would like to make priority. We can make sure we get them in the discussion today. Dan, what are some things you would like on there besides oil?
I think general overall manufacturing sector, labor numbers, there's a lot of discussion about what the unemployment rates actually mean based upon a lot of factors.
Okay.
I run around all the time talking about the national average says 3.2% of the population is unemployable, and yet most of our counties are below 3%, so we're already employing the unemployable, so to speak.
Very good. James, thanks for joining us. We're just starting, so you haven't really missed too much. Anything else, Dan?
No.
Chris, you were having a hard time. If you have any things you want to add into this, you can put in that chat box. Eric, is there anything you want to add or make priority in this?
No, I'm good with any of these.
All right, James, you got any comments? I know you just got on board. I'm not sure if you got the audio all working quite yet. Here are a few items that I have listed as potential topics to chat today. We're trying to make a priority to make it useful for you. We don't hear you right at this point, so if you want to add something, you can put it in the text box. All right, let me get moving on this. I'll start with the U.S. national economy. A couple things. It really needs to be pulled in and put in perspective of what has really happened in employment this last year. But I threw this general idea down. If we have to create 140,000 jobs just to keep up with the natural growth of the United States, what does that really look like over the last few years? How has job growth been? And so if you look at 2010, we lost jobs. In 2011, we lost ground. That means it grew less than that 140,000. In 2012, we were right around that 140,000. 2013, it grew a little bit faster. And in 2014, we continued to expand over 200,000 jobs per month, almost every single month in the entire year. If you really look at it, you take a perspective, the U.S. economy from the employment side, which was lagged fairly long from when we came out of this recession, technically with the growth and production of goods and services, we've been expanding, and it's finally this employment has caught up with what was going on. Let me go ahead and address Dan's comment. I usually put in a couple slides on the unemployment, and this time I don't have a lot on the unemployment and the labor force. There is a lot of discussion of what is going on in this labor market. And you look at unemployment numbers, it doesn't reflect what has been going on. Well, actually from 2010 to 2014, unemployment kept coming down during this entire period of time, and it wasn't until really 13 and 14 where we really started having that recovery. We, go back to 2010, unemployment numbers were looking a lot better, but we didn't see it in the employment numbers. So what happened? We have the issue of people taking unemployment insurance claims and then also actively or not actively looking for jobs. So what happened is people they took all their unemployment insurance claim, they expired all their benefits, they couldn't find jobs, and so they stopped actively looking for jobs. And they removed from the labor force. Because they removed from the labor force, it makes the unemployment numbers continue to go down in 2011 and 12 and 13, although we didn't get that employment growth. The issue that people are talking about is this a structural or is this a frictional unemployment? Structural means they lost jobs and they don't fit the new labor market. Frictional means it's just this is hard to find jobs. We're just going so slow, and matching that labor force is just a difficult component to it. When you really come down to it, economists, you back up to 2009 and 10, they said, well, this has got to be a lot structural, where jobs are just not matching. And you look at the research now, when you look at the labor market versus the job creation, and it actually says that is much more frictional than it is structural at the U.S. level. I say that because when you look at some areas within Kansas, however, I think, and this is a perspective that is much more structural in nature in Kansas, that there are jobs that have gone away that will never come back and the skills are not matching, than it is necessarily frictional. So I think we feel a lot more of that than you see at the national level and what the commentary is going on. Core inflation. This is an important issue on the national level. If you back up the last few months, core inflation, which removes food and energy makes it much more volatile. If you look at food and energy, it's growing. Our inflation is much slower. You back up to September, it was 1.8%. November, it was 1.7%. December, inflation increased by 1.6%. That is called disinflation. We're starting to grow. Prices are growing at a slower and slower rate each month, and that has concerns. That has concerns that the Federal Reserve are going to be looking at their next meeting. They just finished this last meeting. So the next meeting, they're going to come back. They kept saying they predicted increasing their rates because they have to do that because they have this negative real rate Well, when you look at inflation, which is one of the primary targets, and you see disinflation, there is some concern there. Most of the concern behind this, however, is the energy side. The energy side continues indirectly to keep pulling down prices. What we would expect as employment continues to go up, there's upward pressure on wages. That upward pressure on wages should deleverage some spending and start ratcheting up some other costs. The only problem with that is a longer-term issue. I'm not sure inflation is going to have that pressure to really bounce up, and most economists are not really predicting high inflation. This is a concern to watch, because if we get into the January numbers and it drops further, which is a good chance it goes to 1.5 or 1.4, we're really looking at some issues that the U.S. economy is going to deal with. Is there a question out there? All right, the real GDP, it was very strong. You go to third quarter, it was over 4%. Fourth quarter came in, and it came in at 2.6%. There's been some commentary saying, oh my goodness, we're slowing down. Not even in the case. I think the 2.6% was expected. When you look at the components for GDP, not something to worry. We're still looking at in this perspective, a strong growing U.S. economy. Here's a couple slides that I think are interesting just to put in perspective. If you look at January's numbers of what happened by state, this is the states that are in recession, at risk, or recovering. You can see the recovering was all over the board, and really the ones that were in risk back in 2011 were some very unique states that had either some property issues, had some other stuff going on in a manufacturing sector. And then you see North Dakota up there growing because of energy. Let me click forward here. In 2013, you see some of the energy states really reemerge. At risks were a few other states. I come all the way to 2015, and you see something completely different. A lot of expanding in the energy states and the manufacturing states. People don't realize manufacturing is the middle of the United States. That's the heart of manufacturing. A lot of that's been coming back except for Kansas, and you can see Kansas in the middle of being the one that has been left behind in this whole recovery. We have energy, but we're such a small player in energy. We have manufacturing, but it's unique manufacturing that has downward business cycles, where other manufacturing was continuing to ramp up in the United States, and manufacturing has added a lot of jobs, has grown in GDP at the U.S. level, but we haven't seen that in Kansas, and maybe we'll break that out a little bit. If you have any questions in the middle of something, please feel free to speak up. I'll cover more stuff since we didn't have a direct need for any specific one. Is cheap oil good or bad for Kansas? So Goldman Sachs came out 2 weeks ago and said there was a need for rebalancing the oil market because there are too many players, and that rebalancing was going to put pressure on the small and medium-sized companies in the oil production side. If they were over-leveraged, they're trying to push them out. OPEC has been allowing this to happen because, one, they're losing control, but they're also wanting to remove the number of players. Think about the basic structures of economy. When you have only one or two players, you have price control. When you have a few players, you still can control prices, and that's what OPEC was trying to do for a number of years. Now with the U.S. and this energy boom, we are now a dominant player in the global economy with a lot of small and medium players, but we're flooding the market, and because we're flooding the market, other countries said, okay, we'll flood it too, and they're trying to put that downward pressure on energy prices, get rid of those smaller players so they can buy them up and get less players in the overall market so they can control prices again. If you look at their forecast, Moody's, and if you look at Goldman Sachs, everyone's still looking for a price of barrel to be back up to $80 by the end of the year. Even the comments I've read last night on the latest data coming in, they're expecting prices to come back. Let me give you a couple. Okay, I'll give you Kansas oil. Now I'll give you a couple headline numbers. Here's Kansas, the 12-month moving average with the U.S. You can see, if you follow this, the United States, which is in blue, you get back to 86. Anything under the 0 is a negative. It's slow growth. It doesn't matter the direction of the line. And you can see from 86 all the way up to 2007, we really had no increases, or really a decrease in most of the production of oil at the U.S. level. However, you see a different story coming on in Kansas. We had a growth in the 1991, and then it's really coming into 2000 and 2004 when we started having more exploration. The real story for Kansas, and some people on this call probably already knows this, is that a lot of the fracking technology was developed in this area because the cost of production and the instruments were a lot cheaper to do. So we had that increase. So that's why our increase had went up. But put this in perspective, you get to 2008, that was our last peak. It came down a little bit. We still haven't really made to our previous peak or our historic peak. So we're nowhere, although it's been increasing lately, and it continued to increase all the way into 2014, we're nowhere near our previous peak. So what kind of players do we have? We have a long history of oil production in Kansas. I've talked to several people on the oil side, some producers, and even some of those providing drilling on this segment. We have a lot of small players that are even family-owned. I just happen to own a lot of land across Kansas. Our family does. They've been the oil. We are such a small producer. We have no control over our price or the production of our oil. And so it gets sold off into some other players. So we are, by definition, a price taker in this market because we're so small. Although the Goldman Sachs says there was going to be a pressure to take down and to remove some of the small players, some of that has happened across Kansas. I've heard a few people try to sell off to larger players, but we have a longer history. I'm not so certain that that's going to really significantly affect the ownership of a lot of our oil production rights in Kansas just from this point in time. It's not a short-term issue. There might be a longer-term issue pushing for selling, but I'm not so sure on the short-term issue. Keep in mind, I don't have this one in here, but we've looked at employment. I know some areas are having some massive declines in employment. I know the one just southwest of Wichita, there's a lot of decline in employment, and the community invested a lot in hotels and prepping for that growth in employment. But overall, employment is a small percent of the Kansas labor market. And although we're going to reduce some employment in here, it should not be a significant factor in the state on the employment side. And it really probably won't affect too much on the wage side. What the real loss to Kansas from what I've looked at data in the past, it's going to be income. It's the income derived from the oil, which is going to impact. And in some communities, I'll show you later, that has been a big fuel for their service side, the retail side of the state. I'll pause here because I imagine Dan will want to make a comment, and same thing with Eric. Dan, do you have any comments for the Northwest Kansas?
No, it makes perfect sense. It's just, I think, it's a concern that needs to be addressed in terms of labor availability.
Right. Would it be of increasing because of being laid off, or the tightness in that sector? What are you talking about?
Well, I don't even know how to put it into words.
That's fine.
It's, the discussions are that some people see it as an opportunity to meet the labor market with the decline in the oil fields, to meet the labor market in the manufacturing sector. Others see it as another potential for exodus of those employees from the region to go elsewhere.
All right, very good. I see exactly what you're saying, that some of them were very transitory in nature anyway. They came there just for that job.
Right. And
so they could be and by definition, they are transitory. They are going to follow whatever job it is they need to go after. And I'll actually show you some data for your area on employment and establishments and growth. So I think that will come back in just a second. So let's hold on to the rest of that thought, and maybe it'll give you a perspective on it. Eric, do you have a comment?
I found everything really interesting. It's good information to know. And in my world, other factors are more contributing to what will affect us. The lesser prairie chicken as far as development, and then EPA 111D for clean energy. So coal-fired plants going offline will affect where the new power, the green power, is going to come from. So that's what really affects me in my industry. But this is very interesting, and it all makes sense, as Dan says, on the oil.
All right. So I just pulled up the latest crude oil inventory data, and I got to say I'm a little surprised by this. This is some national data. This is U.S. oil inventories. What has happened? The most recent data as of the 23rd of January that comes out weekly. You'll see that crude oil inventories and imports, I didn't put the imports, both increased recently, which is putting additional pressure on this market. I was hoping when you see the last few jagged elements down is that the U.S. production market might be adequately reacting to the overall flooding of the oil, but they haven't. So what it's telling me is that we're still producing oil, that oil is going into inventory, and we're storing more right now, the U.S. side, and they're not really ready to react to the lower costs. That is going to put pressure on this market, right? On the overall cost. It's going to continue to put that downward pressure, and that means our U.S. suppliers are still kind of calling this bluff and maybe trying to push some pressure on the smaller ones themselves, that they might want to buy up some smaller people across the U.S. The refineries, surprisingly, the refinery capacity is 88%, which is lower than what it has been in the last few weeks and months, which is I said not in line, is in line. I mistyped that this morning. It is in line with historic demand for this time period for that week. It should come down. Refineries are trying to leverage out. So what's going to happen? Let's look at some of the capital inventories. If you look at the initial releases for capital inventories for oil, they're expected to drop. They have been dropping, and they're going to expect to drop as much as they did in the Great Recession. So all that exploration and new rigs, all that has continued just a nosedive. So Dan, when you look at the area, I mean, you already had that. So a lot of the exploration in Kansas over the last 2 years has already started to dry up. So I'm curious, Dan, if you have a perspective towards that. Although you're seeing at the U.S. level, inventory capital investment is going down. We already saw that in Kansas. I'm not so sure, although you see that, I'm not so sure it's going to be a big issue across Kansas at this very moment. I think we already saw what happened. We already explored our opportunities. It's just about pumping at this point. Any thoughts on that, Dan?
Well, it's more so on a regional basis where, the individuals that, like, I give the example, I have some friends that work for Discovery Drilling. Well, they were working literally 14 days, in a row. They finished one well, moved it to another location with four units going. They're dropped back to 3. They're looking at some pay cuts or layoffs, just based on the price.
Uh-huh.
This all occurred, in the last 3 or 4 months.
Right.
So it's a continued concern as far as, will it stabilize? Will it level out, and so on? Nobody. The uncertainty of it is more concerning than anything.
All right, hold on. I got a message from James. Let me open this up. James said, in Northwest, there are still survey crews running, but not as many. Thank you, James, for adding that. So overall, there is this dynamic going on. The U.S. is growing. We have more employment. We have more wages. We see the consumers out there driving more. They're consuming more oil. They're consuming more gasoline. The cold snap right now is going to take a little bit of relief off of this, which is helping. Lost control of my PowerPoint slides again. Here we go. So overall, and actually let me say this as well, if you look at SUV sales, the automotive sales, this energy has actually been increasing sales in the SUVs lately. So people are buying the bigger vehicles, which is kind of irrational consumer. It doesn't really help in the short term. This is a short-term issue. But their consumers are filling up their tanks. They're absorbing some of this excess supply. The problem is over the next couple of months are not our peak times for traveling. And I'm not so sure how much they can absorb to help balance this off. Still, although there's a lot of negative commentary, the benefits to the consumer at the U.S. level still outweigh the negative income losses that we would expect. And if you look at the history of U.S. recessions, because there's commentary saying that the energy market could spark another recession or a recession for the U.S. We have not seen a recession in the modern time from lower energies. Actually, you would see something very different. This low energy should help fuel some consumption. It should help fuel lower costs for production. That shouldn't be the driver of a potential recession. Now, I'll say, with one caveat, if we don't see prices coming up within the next month or so, and it really needs to be in the next month, a significant rise in prices, then we're going to look at some other issues within the United States. It's going to go from being a net benefit for consumers having extra cash and spending to some potential losses, and it could start having some costs to the U.S. economy. It could bring it down GDP at least 0.5 to 0.8% of our overall growth if we don't get prices up fairly soon on that. I think there's another comment. Let me go and click over here. James said, as the auto sales went up, but the auto stocks not rising in step increasing. The stocks are not increasing. There's a lot of stuff going on. There's another comment here from Chris. Although their current growth states are energy-based, which seems to be carrying the national economic growth, pull the rug out of them, and this was only a temporary blip on the recession radar. All right, thanks for your comments. All right, let me go ahead and move forward. I put in some fun stuff. I actually used this a week or two ago. Is cheap oil good or bad for Kansas? I made some fun comments here to have some discussion. Bert and Ernie are finally going to get some new duds. You got to notice that Bert and Ernie are still wearing the same outfits when I watched them as a kid. All right, these consumers are going to benefit. Abby needs to sprinkle some fairy dust before we all go broke. Right, this is more the producer side. We need that income. It helps. And in Kansas, honestly, we need that income. It's going to affect some of our regional communities like Hayes, I believe, and Dodge, and even Wichita. Snuffy just doesn't really care, and some consumers are taking that perspective. I really kind of lean for Kansas a little bit more to we need some fairy dust. However, consumers are still benefiting, so it's the time part of this that I think is going to impact us. So what could possibly happen over the next decade? Here's some county level data. I did this for fun yesterday to see what's going on, and here's how you look at it. I took every single month and divided it by the first month in this list, all the way on the left, January of 2004, and said what has happened over a decade. Did employment actually increase? And for a couple of these counties, for Saline County, for Crawford County, there was absolutely no growth over the last decade. You look for Lyon County, however, it declined. What happened in Lyon? It's all about the food manufacturing there. Definitely got hit, and it continued to decline net over this time period. I'm going to show you another slide that actually improved recently. Ford County continued to expand, and now is, 15% larger in the employment base than it was in January 2004. And then you see Ellis County actually matching very much what the state has been doing over the last few years, and today is just under 10% growth from what it was a decade ago. Employment is a driver, right, of a local economy. Employer and consumers are the consumption-based economy. The question is, what is the base industries growing those regions? Is there a health and vitality to these economies? And if you look at Kansas, this is the establishments, number of establishment growth. Over this entire time period, we only had about a 6 to 7% growth in establishments at the state level. Now, Now, business growth and business formation in the U.S. has been down as well. This is a little bit less than the U.S. Overall growth in establishments, which is not healthy for the U.S. It's not really healthy for Kansas. The question is, what has happened in establishments across Kansas? And if you look at that, Ford County was really net over this time period is zero. There's been no net new growth over this entire period. Obviously a lot of churn, but no net new growth. Saline County declined, Crawford County declined, and but then you see Ellis County continue to expand. Dan, I keep putting pressure on you. You have any thoughts on, and I haven't had a chance to dig in further about the establishments data for Ellis County. Any thoughts of what is driving the business growth there?
I think it's been during that time frame when I looked, the piece there. It's got to be related to the oil field. It's related to increase in the service sector, retail establishments. I mean, that's what we're seeing in terms of inquiries of new startups is oil field service related, retail, hospitality industry, hotels and restaurants.
Right. So I did see establishments for services going up. I didn't see establishment for manufacturing net, change too much for that area. So a thought could be, and this is just for discussion, a thought for that region of the economy. You have some really strong segments. Agriculture income in the previous, we had a lot of income from it up to recently. You had the oil income, driving this. Manufacturing there was fairly strong during this entire period. Although you didn't have new establishments, they're fairly strong manufacturing with growth in sales, growth in employment. And that really drove the new establishments probably more to the service side and construction side. So there might be a perspective of this. Although there's a lot of growth in establishments, service side is not a base industry. It's just a reflection of the overall strength of the economy.
Right.
Any thoughts on that?
Well, I think you're right. It reflects, what's been going on, the expendable income. Expendable income and optimism, and also, the development going on north of the interstate just spurs additional investment, additional growth.
Right. Very good. So here's annual wages. That is, again, from that base, this is a base year for 2003. How much has income changed? So over this 10-year period, Ellis County had a fairly large increase, 40-some% growth in the annual wage over this time period. So Ellis County had growth in employment, which made a tight labor market, which is putting an upward pressure on those wages. Even some of the professional services, some of the banking for agriculture, continue to grow to supply the agriculture sector, right? So it's an upward pressure. Go ahead. And then you see other areas like Crawford and all were slightly less than Kansas on there, and I'll come back to it again. So here's some rankings. I just put a ranking from 1 to 5 for these counties since we're looking at them. Bigger perspectives. Crawford County has had almost zero growth in employment, yet wages expanded slightly. So what's going on there? Well, it's really a different story than from what Ellis County, right? They've been declining. They didn't grow in employment, but they've been declining in populations, which is still also putting pressure on some of their wages. They're starting to turn as well recently, which is helping their wages to come up. There's some new growth there, I think. Ellis County has created new establishments. We hear a little bit of a more opportunity here, but not necessarily broad base. Ford County has had the largest employment growth, right? And that's dependent on some large employers, so there's some risks on that side. Recent performance, I'm going to show you one and then move on. Here's the employment year-over-year change for each of these. And then, unlike Lyon County, which was declining over that decade and still net negative, if you look at recent growth, 2014 they had some growth, right? They had some more growth back in their food manufacturing, and anything over the line is a positive no matter the direction. You'll see Kansas has continued to grow. We had some of the larger MSAs producing some more jobs, which has helped balancing off the state economy. Ellis County has been strong growth for quite a while, so it coming down to a fraction of a percent is not really too much of a concern right now. However, it's just not too much of a concern right now for their long growth that they've had for quite a while. I'm going to skip some of these real quick. I had some questions. Let me go to state budget. I think there's some interesting factors here. Don't answer this quite yet. I just made this to be funny. How concerned are you about the state budget's impact on critical public services, roads, schools? And I put a couple funny responses there just to start getting you to think what might be going on. So what's going on? We're still around a $279 million shortfall for this fiscal year. The governor already suggested, imposed a cut on department, which is a problem. And there's a expected shortfall of $436 million for the next fiscal year. So that's the data. I know there's some latest news out there that the budget director sent some private emails to give a heads up to some lobbyists so they knew what the governor's proposal was going to be. I just happened to, when I was trying to look for news stories, saw some parody from a KU student about the budget officer and the governor on their budget situation. I did not review it, but it's definitely a headline right now and trending. So if you want to go and Google that, you might find something funny. I'm not condoning it because I haven't seen it. So what's the issue? There's a lot of issues going on. The problem with the state budget, and the same comment I made from the very beginning, if you do something too fast, and if you don't have some basic economic growth behind the economy, which is what is needed, you need strong basic growth, increasing wages, strong employment growth to fuel an economy that's going to be dependent on sales taxes. We're much more dependent on sales taxes because of the structure, and we went too fast in a point in time when there wasn't a balance in the overall economy for economic growth. That puts us much more to the whims of what happens to sales tax, the whims of what happens to the overall economy. And since we are a weak economy, remember that slide, there's all the states around us are growing. The manufacturing states are growing, the energy states are growing, and we are not growing nearly as fast. When you take something out in the component, we don't have what is needed to fuel the economy, and we're much more volatile because we're dependent on sales tax. When you take a government infrastructure, which is highly dependent on labor, and you make it more dependent on a volatile revenue source, it's going to have an impact on the structure of government services, just to level that out. Now, one of the comments here was sin tax, which is taxes on cigarette and taxes on alcohol, as a way to help solve some of the problems. So I pulled up a couple slides. Here is the alcohol taxes, here's state spirit taxes, and you can see we rank at the bottom of the U.S. We're ranked number 43, one of the lowest ones. I cannot remember the number right off the top of my head for the spirit tax and how high it was supposed to go, but we were going to go from one of the bottom ones to one of the top ones within the U.S. Now,
I think it was 12%.
Go ahead.
I think it was 12% was proposed.
Right. Yeah, and I have this in a different method, or I have it. The Tax Foundation put this dollars per gallon just to make it to normalize the data. When I looked at it, it was going to put us one of the top states of there. So what's going to happen to Kansas on the sales tax? First of all, on these kinds of the alcohol tax and cigarette, both of those, if you look at the price elasticity demand, consumers will almost always pay it no matter what the price is on them. So consumers are going to go and pay whatever the cost is because they consider that to be something they want to consume, cigarettes and alcohol. So for the likelihood of creating some more stability in the state budget, putting in taxes on these two items actually creates some more stability in the state budget. but it's still a small part of the overall budget. It will create some money. It will help the state economy a little bit to overcome some of this deficit, but it doesn't really create enough stability, just from my perspective, to counter what has happened to the structure of our revenue stream for the state. So the borders. Well, it is clear if you live anywhere near a border, you will not purchase locally, and you will purchase in the state next to you. So, people in Wichita are going to go to Oklahoma City. People in Kansas City are going to go over to Missouri. That is a clear factor. In some cases, the drive itself, although consumers aren't going to be rational enough to figure out the costs, or probably will pay them off by driving over the neighbor and purchase there. The leakage from that revenue is probably not as significant. I'm not sure if they've estimated everything. They wanted a certain, I think 200 some to help cover the state budget deficit. They might not get the exact estimate because of this drastic change potential drastic change in the tax structure. Here's cigarette taxes. It's going to go from 79 cents a pack to $2.29 a pack. Again, it goes from one of the bottom states to one of the top states. It should be noted that this creates a public health benefit, though. And so from a perspective of policy and an economy, there is a public good by increasing the taxes on alcohol and on cigarettes. It relays the cost of the burden system to the society. It takes in a tax, and then it has a revenue stream to discourage those behaviors and to make it more of a luxury kind of good. The problem with that is if we're taking these taxes and just covering our state budget, we're not really allocating it to the needs that it probably would from a policy perspective. If you're going to increase the tax, maybe there should be more of a policy question behind there. We need to increase the tax because of an issue with health of lung cancer, or an issue with drinking and driving and underage drinking, and then using that taxes to combat certain policy issues. So, any questions or thoughts on those? I would say we are going to struggle over this next year. I mean, it doesn't really matter what perspective we come from. The state is going to have a difficulty to retrench on some of the income tax to balance this off. Consumers in businesses in either way do not like drastic changes, and they do not like changes that are unpredictable. And we're getting both factors which will affect behavior in Kansas. So if you're a business and you are directly related to some of these factors, you might hold your spending and your expectations because you're concerned of what will happen. So we might see the next few months, until we see a resolution to this, we're going to see businesses probably hold out more investments. They're going to hold out a little bit because they're concerned. You're going to see consumers in Kansas, unlike you're seeing at the national level, spending more. We're going to probably retrench a little bit on some of our spending because we're concerned about what might happen over the next few months with the state budget. A lot of people in Topeka as well will probably be impacted by some potential cuts from state government employment. All right, let me go to this last one and wrap up with some questions. Why do I call it for economic boredom? I think someone made a text comment about this. The reason why I said economic boredom is I've been here 6 years, and over the 6 years we've had to make revisions because of all this dynamic changes going on in certain industries across the state, going on in different regions of the state. It has been very difficult to try to predict everything, even though we have a regression-based model, even though we put other analytics and predictive values in there, even though we talk to industry leaders in those sectors to help balance what's going on. All right, can everyone still hear me?
Yeah.
Okay, my screen just went blank there for a second. Even though we had all those factors in it, we've had to tweak our forecasts from our fall annual forecast to our January and our spring. It wasn't massive tweaks, but we tweaked it because we saw shifts in the economy. The reason why I say economic boredom is, and this is a good thing, this is the first time we had 1.8% in the fall, and we kept our forecasts right really close to it. It was a small change, didn't effectively change the growth of 1.8% still for 2015. we're still fairly strong with our expectation, and it didn't change that significantly within the sectors of the economy. Professional services continues to grow, even at the state level. We see that, Hayes came into this conversation this morning. We see some professional services still being a stronger component for Wichita and Topeka and for Kansas City. And then you see the healthcare sector. We have a higher prevalence of this aging population, and some of this population not moving away, demanding more healthcare services. So there's just consistent growth in that sector. Government, I think we changed this one slightly, revised it down a little bit with some government pressures on there to just 0.1%. Here's the story behind there. Federal government is going to impact it in a negative way. State government, we already had it negative at the state level and across the different regions. It's because of the actual growth in employment, the actual growth in demand across the state for local government services is actually making it just slightly positive. So local governments are going to grow just to keep up with basic services they have to deliver. We're not seeing a lot of growth at the state level, though. Manufacturing and construction, we have 1.8%, which is a lot, which is the same growth as the state. Really, the construction, the growth in this is the construction sector. Construction is rebounding because there's been this demand in the high-income group who wants new housing. The residential housing has been growing across the state, so there's been a construction creation. The problem with that is we're still nowhere near our previous peak in employment. Manufacturing, as I've alluded to several times, has not grown as it has in the U.S. level. I should hit that because I know Dan had made some comments to wanting to know more about manufacturing. What's our fundamental growth in the manufacturing across the state? Well, we are great at machinery manufacturing. We're great at fabricated metals. We're great at farm equipment. We have some plastics and resins. We have obviously aerospace. And if you look at the business cycles in all of these or the structural issues, they all happen to be either in a downward business cycle or a structural shift in all of them. And the ones that are more broad-based, like machinery and fabricated metals, if you look across the state, although some of them support some sectors that are growing, a lot of the machinery and fabricated metal sectors still support our other base industries like farm equipment and aerospace, and so they're still being impacted by that. There's not a lot of growth. There are some small successes in some companies, but not broad. So is it a concern for manufacturing? Well, there's still a concern because the manufacturing sector, we are a manufacturing state. Our state will not grow until we find ways to get them reemployed and find them to re-engage them. I have less of concern because it's a downward business cycle. Farm equipment had a peak just the last couple of years ago. It's growing at a much slower rate, but it can't continue to grow at the rate it was before. So, when I look at it and take a step back, I see some current concerns. We need that growth for the state economy, but I have less concern because they're just in a business cycle, or they're structural changes to what's going on. That makes it kind of a boring, slow growth year. I don't have a lot of expectations, especially with this increased political pressure recently from the state. It's going to hold people's cash. They're going to not want to invest, and they're not going to want to put a lot more money into it. The upside to this is 1.8% is growth. It is growth. We're still expecting to grow over the previous year. Just don't expect a lot in the state economy. I'll pause there and see if you have any questions.
This is Eric. I know that was a very good presentation. Very informative.
Well, thank you, Eric. I think Dan, was that you saying you didn't have any questions?
No, great information. Looking forward to the conferences. Do you have tentative dates in mind?
I think we have some dates, but we haven't confirmed them all for October. Well, we do have a date for the next Kansas Economic Outlook Team meeting, and if you have ideas and thoughts on a specific sector, please email me. I'd love to either react to one of those and prepare some information, or if there's something that you would want to share, we might go, I'm not sure we're ready for that quite yet, but I eventually want to go kind of around and start getting some people to talk about either their sector or their region or something like that. We'll bring in, and I can help facilitate those discussions. So if you have ideas, send me an email and we'll get to it.
Sounds good.
If you know other people that would be perfect for this or would love this information, please give them my email address or Ann's. I know she's would be glad to contact them. I've recorded this session, so if you want to share it with someone you think that might have value, we'll share it out right now so we can just continue to build and get a good group of people who would want to exchange, get more dialogue as we go forward.
Okay.
All right, thank you everybody for participating, especially the first time. Let's continue this, and I look forward to our future meetings. If you want to stay on and chat about this, I'll be glad to stay on and chat.
Thanks, Jeremy.